Hi, guys. Welcome back to Morant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. I was watching a live stream with Markets with May, 44 minutes of her talking about the benefits of a reverse stock split and any misunderstandings that you might have. Clearly, one-way agenda here. Want to have the reverse stock split happen after the conversion happens. It's all happening at the same time, but I do have a question for you, Markets with May. And I have a question for everyone if they can pay attention to this, because unlike most reverse stock splits, it's a little different. And I hope you pay attention. So I'm going to go ahead and show your clip about you explaining percentage of ownership after reverse stock split. So bear with me. She has a very bad camera and she's new at this. So I don't blame her. Let's go.
But I saw so many questions on people feeling like they were going to lose 90% of their value or something like that on a 10-for-1 split. And that's just, whoever is doing that has, you're very welcome, Batar. That's just wrong. I don't know how to say it. And I think what happens is because there's a misunderstanding of market value and cost basis. When it comes down to what do you own? Like, what is your share ownership? What percentage of the company you own? What is going on there? That's always going to be the total value of what you own. It will never be anything. You should never have to do any additional math. So if you own $100,000, like let's say you're baller, okay, because that's a big position, unless you're just super rich. But if you own $100,000 worth of AMC, and let's pretend like, okay, so to keep the math simple, that AMC is only $1 million company, right? Then you own 10% of that company, and it doesn't matter how many shares they either increase, decrease, split, reverse split, whatever, you still own 10%. And that's really, really important, because on the reverse split, nothing should change in the percent ownership, and therefore nothing should change as relates to what you own. No one took any value away from you, because it's always the price of the shares times it's always the price of the shares times the number of shares you own. There's some caveats to that, and we're going to get to that. And this is
Okay, let's get to it right now. So what she's telling you is, and all things being fair and equal, that you split it and you reverse split it and you get back the same percentage of ownership. Well, this is an AMC case study, Markets with Kate. Did you study it yet? Because they took a percentage of equity away from people just to get here. They didn't ask for it. They didn't vote for it. Do you know how they do this? They dilute. When you do a reverse stock split, just so we're full and clear, preferred shares, the 50 million preferred shares that AMC used to have, that is now 40 million, they do not get affected on reverse stock splits and splits. Correct me if I'm wrong, okay? I don't mind being corrected, not one bit. But the percentage of ownership will change based off of the dilution of the preferred equity units that they will have to release. You are aware that AMC has $5 billion in debt, and that they're doing this with the advantage of diluting their shares even more. They have no choice. They have to. But they can't rock it with the 1.5 billion float that they'll be sitting on after the FPA goes through. Now, how do we know they're going to dilute? Well, first it's here. To adjust authorized ordinary share capital such that, after giving the effect of the above proposals, if adopted, AMC would have the same ability to issue additional common equity as it currently has to issue APE units. That means, and I'm letting you know now, those preferred equity units will be put onto the table. The 40 million preferred shares, those are not going to go ahead. The preferred shares, those are not going to be reverse stock split. They don't get affected. Any unissued shares do not get affected. Now, I had to go back to a case study my damn self, and I had to go look at another company that did it. In 2011, here's the proxy that I read. The issuance in the future of such additional authorized shares may have the effect of diluting, okay? It will have the effect of diluting earnings per share and book value per share, as well as the stock ownership and voting rights of currently outstanding shares of common stock. This is why the fine print always says common A stock will reverse split, because you do not reverse split preferred shares. Adam Aaron is checkmate the retail investors again. I'm trying to tell you guys. In addition, the effective increase in the number of authorized shares but unissued shares of common stock may be constructed as having an anti-takeover effect. Oh my God, guys. Listen, there are bylaws in place. They're called anti-takeover bylaws. It's there on page 30 of the prospectus. Go read them, guys. He is deploying these bylaws, but not for anyone else to take over his company. He does not want retail to own the company. This is why he sold it to the shorts. This is why he sold it to the company, that the bondholders that actually shorted him down. This is what another company even wrote. Although we are not proposing the reverse stock split for this purpose, right, for the anti-takeover effect, we could, subject to the board's fiduciary duties and applicable laws, issue such additional authorized shares to purchasers who might oppose a hostile takeover bid in any efforts to amend or repel certain provisions of our articles of incorporation or bylaws. Guys, I have been studying this stock for 2 years, every night and day. I have never seen the gymnastics that I see now. The financial gymnastics, that's what I call them. This reverse stock split, well, let's go back, guys. When the ape units came out and he said, this is what I'm doing for you. This is my checkmate. This is my pounce. That was a lie. I know that. I knew that then. I called it the Trojan horse. When I went and read the prospectus for this company and the bylaws that are put in place, he has been implementing every single step. I encourage you guys to read it yourself. But look at this with the right. I know what everybody's saying, but we have to. But we have to vote yes, or else we're going to dilute even more. Well, we have to vote yes, or else this company's going to fail. Guys, the company has failed. They're looking to dilute and drain more equity out of retail. Answer my question. Markets with Kate. Markets with May. I'm sorry. Answer my question. Does your ownership change because those preferred equity units don't? And when they go ahead and release more preferred stock onto this market, which they will, this is how they're going to generate more shares and dilute this float and dilute your ownership. You're about to give them that power by voting in that third line that they asked for. Good luck, guys. Peace.